Welcome back, investor. We have Joe Fulvio from CamaPlan today to teach us how to do self-directed IRAs. This is going to be one of those actionable types of episodes where we're going to get deep into some of the tactical specifics that you need to know on how to choose an SDIRA custodian. And Joe will tell you like why CamaPlan is obviously the best choice, but we're going to talk about the kinds of questions that you should ask, fee structures, how you go about setting it up, and how you avoid from just putting it on the back burner to something that you never really get around to. Because I know that when we first started down this path, we were really, really excited about getting our own IRA, a portion of it converted over so we could invest it into some private assets. But then when we actually got down the road of doing it, we started hitting roadblocks and hurdles with our custodian and then getting the money transferred over. And it just became something that became something we had to really focus on. And it's so much easier to do now than when we first started back, like I think it was like 8 years ago when we transferred ours over. So Joe's going to join us today so that you can hopefully avoid some of the hurdles that we had getting ours set up. Keep yourself motivated, moving forward, and learning how that you can get into private assets like real estate, precious metals, and other types of things, other people's businesses that you want to invest in through your retirement plan. And this is going to be somewhat comprehensive in helping you figure out how to navigate that landscape. So thank you for coming on to the show, Joe.
Thanks for having us, Emma. Appreciate it. Glad to be here.
Yeah, let's get right down to it. Like I said, I want this to be a very tactical episode where the listener
hmm
can say, okay, where do I get started? So just by brief introduction, your background and your credibility. So you're going to be giving us a lot of information. And so can you just briefly tell the listener what makes you
Sure.
qualified to give us this information?
I spent 45 years helping business owners and founders scale their companies, and that included positioning them for outside capital or positioning them to sell their companies. And so I got a good look at what works and what doesn't and what appeals to investors. And that drove my interest in investing in general, which I started back in the last century. So let's get into that. And I was a retail investor and enjoyed it. Met Carl Fisher, the founder of CamaPlan, through a friend, and he asked me to come aboard and help him with a few scaling issues. And then I caught the religion of what they were doing with alternative assets and self-directed IRAs, and I've been at it ever since.
Yeah, exactly. So you kind of came on as the business expert and you taught them the scaling and then they taught you about how to invest in alternative assets, meaning stuff that's not publicly traded on some sort of stock exchange.
Exactly,
Okay.
exactly.
Yeah, my introduction to it was again through somebody that I knew, and we were out at dinner together. Over at their house. Our kids were all playing, and I heard him step away from the conversation to raise capital from somebody, some friends or family, and it was talking about how to get their IRA converted over so that they could invest in this private company. And it was kind of funny because it was probably like just a few months later, maybe not even a few months later, very, very soon afterwards, I was sitting at a real estate, one of those rah type of things where, run to the back of the room and sign up for our coaching program. And they said, raise your hand if you have a self-directed IRA. And I raised my hand because when I had heard him saying this, I had logged on and I could choose different mutual funds that I could invest in. And it didn't occur to me at that point that I couldn't choose anything else than those four
Mm.
mutual funds. And so, yeah, I've got a self-directed IRA. But when I actually started talking to somebody about it after the presentation, which I did not buy, I realized like, oh, I do not have what they're talking about, and that's what kind of sent us down the road. And we didn't have any referrals who could help us. I mean, it was super confusing. So let's just start like somebody like me, where you're overhearing somebody or like you met the founder of CamaPlan and they start talking about self-directed IRAs and you're like, that sounds pretty cool. I'd love to be able to invest in real estate in my retirement account. Start from ground zero where they don't even know what it is. What
Great.
are the first steps that they should be taking to learn more about it and to go down the path of getting started, getting some of their portfolio converted over to self-directed?
Well, let's start with what they may know. They may be familiar with IRAs. People in your audience may have had an IRA, have a 401k. So what we do is really no different than what Schwab or Fidelity or Vanguard do. We're answerable to the same authorities, the IRS. It's structured the same way. Although they deal with listed securities, stocks, bonds, mutual funds, ETFs. We deal with everything else. So we deal
Yeah.
with business ventures, intellectual property, oil, gas, mineral rights, real estate, of course. So we handle everything else. And so you can bridge your knowledge and your understanding of that to this very, very, very easily. I call it three steps. You open your account, you fund your account, and you start to invest. And we escort you through that process. Opening the account's no different than opening a bank account down the street. You're going to provide some personal information, and you're going to tell us about the institutions where your funds may reside today, whether it's an IRA or an old 401k from a job you had in the past. And we'll help you bring those funds over to your new account. And once they're in your new account, we help you with the sellers of real estate, if that's what you want to do. You want to buy real estate and put it in your account, or other forms of investing, the kinds like I like to do, which is passive investing, mortgage notes, and private lending. So open the account, fund the account, and start investing. And the first two steps can be done in about 20 minutes. And we'll be there to help you do it.
Yeah. So, what type of person is a good candidate for a self-directed IRA, and who is not? I'll raise my hand and say the first one. Um, Accredited investors need this. Unaccredited investors might need this. Can you expand on that and maybe go from there as well as who needs this?
Yeah, self-direction, it's what the term implies, is that you are kind of on your own. You'll do your research, you'll go out and find deals on your own, you'll vet and conduct due diligence on your own, you'll negotiate on your own. We're the record keepers. I mean, we don't like to just throw our hands up and say, well, whatever happens between you and the other party is your show. We're just, don't shoot us. We're just the piano player. But that's really our legal role. However, it will keep you in good graces with the IRS. The people that are best suited to do this are willing to do a little bit of the homework. There's a saying that people spend more time planning vacations than retirements, and that's very true. And so, if you don't want to deal with details, if you don't want to read through documents and pay attention to what you're doing, you could lose money doing this. So. It's a great way for people who like to dig into things and like to do their homework to invest.
Okay. Yeah, that's a good point because I I remember when I was a little girl and I was asking my mom like what her parents did for a living and she said that her dad was a stock investor. And as a little kid, I was like, "Wait, what? You can make money giving people money and then you can use that to live on?" It was just kind of blew my mind, right? And so over the years, I watched the stock market completely change when I first started looking at it like in high school. I was thinking, "Oh, I could be one of those young proteges who can become this great investor," and I hated it, right? And every time I looked at it there would be some new technology that would come around, like fractionalized shares, and then you had e-trade, online, no cost
Mhm.
trading, so investment clubs kind of started to die away. And I recognize, like, back in the 70s he didn't have index funds, he didn't have electronically exchanged funds. He was reading the Morning Star in the newspaper, and he was having to do research and trading like one full share of stock at a time. Like, it was a very, very different world. And I think how he was doing the stock market was kind of like how we're doing private markets right now. So we think of the stock
Mhm.
market easy and set it, forget it. You just throw some money at that benchmark at index fund and forget about it, right? But it didn't used to be like that. And I feel like with technology, maybe someday private markets will move into that territory. But right now, you kind of have to think about doing your due diligence on deals is more like investing in the stock market was back in the 1970s before all of this tech really shook things up with Vanguard, specifically in index funds. And would that be an accurate statement of how people should think about their private market activities right now?
Yeah, I think that's a great parallel to the way things were. And I'm old enough to have had to invest back in those days. And you waited for the paper. And if you did research, you went down to a library or you ordered the prospectus and it got mailed to you and that kind of stuff. So yeah, there's a lot of paper still in this business. You're doing your homework on the phone. You're doing your background research. Fortunately, you can do a little bit of that online. And now we're starting to see the emergence of platforms for fractional ownership of various forms of alternative investing. So I think you've accurately described the parallels between the past and the present and between the stock investing and alternative asset investing. But alternatives are moving fast in that direction. And I think you're going to see some of the bigger players take an interest in getting into alts or acquiring companies that deal with alts because investor interest is very strong and growing.
Okay, so my traditional custodian, I think we used Fidelity for our first change. So my husband had a W-2. He'd left that W-2. We rolled it over to a traditional IRA and a Roth IRA inside of Fidelity. And then we had to call them up and say, "Hey, here's how much we want to be liquidated." They sold our stocks at that day's price, the day they said they were going to liquidate it. And then they
Mhm.
mailed us a check. But then the second time we did it, It might have been with Fidelity again. I can't remember. It was another W-2. We'd left that W-2. We rolled it all over. We had some in traditional. We had some in a Roth. Like our contribution went into the Roth and the company's match went into the traditional. And then it was very different. They just asked for ACH information. We told them how much we wanted liquidated. They gave us a strike date and it just showed up in our bank account. Whereas the first time they mailed us a check, we had to take it to the bank account. And then they had to give like 15 days waiting for that check to clear because it was a
Right.
large check, and they had to check with the custodian to make sure that it was okay. It was a very, I mean, even just 8 years ago versus I think it was like 3 years ago, the last time we did a conversion, was already very different from the tech standpoint. So, can you walk an investor through like what that looks
Sure.
like when they decide, I'd like to do this? They talk to you and you get them started on the road.
Right. We have a conversation, make sure we understand exactly what they want to do. And also
Mhm.
we find out what's on the other side. You know, if they have 401ks, the money comes over in a different way than it is with IRAs. We make sure that if they want to open up a Roth IRA, for example, that they already have one on the other side where their funds are, or we help them do a Roth conversion if they want to bring money over and do that. So we'll walk through the process of opening the account with them. We do a shared screen experience if they want to. Some people are self-starters, they'll go through it on their own. And
Mhm.
then it usually takes, we say, give it about 2 weeks for funds to come over, whether you're doing a rollover or a transfer. If you're doing a transfer of funds between similar accounts like IRA to IRA, we do that for you. So you don't even have to think. And that's what I meant a few minutes ago about how in 20 minutes you can accomplish the first two of the three steps of getting involved here. But if you're going to do a rollover from an old 401k, we give you everything you need to go back to Schwab or Fidelity or the custodian and say, I want to do a rollover to CamaPlan. Here's my account number. Here's their bank information. And then the funds will come over electronically, so that you shouldn't have to handle any funds yourself. We say
Mhm.
give it 2 weeks, but the big brokerage houses tend to do it in several days. And you're notified by email that your funds have arrived. And once that happens, you're free to invest.
Okay, perfect. And maybe that was the difference between when we did it the first time and when we did it the second time. Is the first time it went into the LLC because we were planning on funding other people's flips. This is an important thing. You can't fund your own business. Let's just get that out of the way. Like it has to be somebody else's business. You cannot self
Yes,
deal with your IRA. And that's one thing that you are good at, looking at the investment that the person is thinking of and telling them not whether or not it's a good investment. You can't do that, but you can tell them whether or not it's a compliant investment, and you
exactly.
decline to fund that if you feel like it's not compliant, and to keep them in good standing with the IRS. But in our situation, we had it put into our business bank account in an LLC specifically created for that IRA. And once we had funded a couple of things with that, like a hard money loan, some other stuff, I was like, I don't really want to do it this way anymore. And so the second time, we just put it with the custodian and didn't send it to our IRA because I think the only advantage for me having the IRA was speed and making my own decisions. But it's like, okay, I got a house, it's closing, on Thursday. Can you get it funded? Like that's when speed really matters. But then we started investing in more boring stuff where speed didn't matter. And I'm like, I don't want to deal with having it in my LLC and all that. So we just kind of went back to the custodian model after that. And that might have been one reason because it was a rollover. We hadn't rolled it over first because we already knew what self-directed IRAs were. And so we just were able to take it from the company plan straight over to our custodian. And it definitely was a lot easier the second time because of those things. It was a very different experience, maybe because of the tech, but also maybe because of the structure that we're reusing. I don't know. You tell me.
Now the industry's getting better at it. You know, they're using new technologies, and more of them are using ACH. So that's a cheaper and faster way to move funds around
Yeah.
instead of having to do wires. And so, yeah, the institutions are beginning to talk to each other a little bit better with regard to
Okay.
that. The option that you mentioned is kind of interesting because
Yeah.
certain types of investments require speed. And one of those is if you're doing auctions, you know, you need to move and put a down payment. One of the big mistakes people who want to do this and aren't doing it yet say, I just found a property, I've put earnest money down on it, and I want to open an IRA. And you've already screwed that up because you can't mix the funds. You can
Yeah.
invest you can invest private funds alongside of your IRA money, but you can't like pay yourself back for a down payment. You know, the structure has to be a little different. And on that subject, the prohibited transactions involve certain types of assets and certain people. Like
Okay.
you can't invest, you can't do self-dealing. The biggest example of this is somebody who wants to buy a condo because son or daughter is going off to college and they're going to rent the rooms out, and you can't do that because that's self-dealing. Same with
Okay.
vacate properties. You can't buy a vacation property and get down there 2 weeks out of the year. Can't do that. Um,
Yeah.
and business ventures are the same. You'll want to talk to us and then talk to your advisor. But if you own, you have to own less than 50% of it. You can't be deriving significant income from it. You can't be the spider at the center of the web who owns 5% of the shares but really controls everything. That sort of stuff. And
Yeah.
there are some family members you can invest in, and family members you can't invest in. But that's getting into the tall grass there.
Okay. And that's what your job is. Once you get your own LLC or checkbook IRA, as they call it, it's like you're not having to ask your custodian for that money. And so it's a lot easier to put money into a deal that you should not be putting into. And so it's nice to have the custodial friction there so that they can tell you, like, this is actually a disqualified asset or a disqualified person. Whereas if you're doing it yourself, you really do need to be very confident that you're choosing those correctly. And it's another level of self-directed. So from that standpoint, one thing that I've noticed when we have investors coming into our private lending fund is that they will have various administrators, plan administrators, custodians, and some of them are really, really difficult to work with. And it takes a long time to get somebody on the phone. It takes a long time to get paperwork filled out correctly because it's like a period in the wrong spot. And next thing you know, they send them an entire blank DocuSign that they have to start over from scratch. I mean, this has happened, right? Because they didn't put the FBO, or if there was literally a period in the wrong spot on one of them, and they had to completely start over. And filling out the paperwork, the subscription agreement, and all of that it takes a minute, right? And so
It,
these investors that run into these kind of problems get very, very frustrated. And I feel like no discussion of self-directed IRA custodians would be complete without a discussion of customer service and fee structures. So different kinds of fee
mhm.
structures. Some are more expensive than others. Some of them are more concierge than others. Can you walk us through the different types of things that they should be looking for with a custodian based on how self-starting they are, how willing they are to do their own work, how willing they are to wait to save some money versus a concierge service like yours? Like, I I have a hard time to walking my people through this because I can't be recommending custodians. I can just say, I don't like working with this one and I do like working with that one. But that's about all I know because I can't tell them about fees or any of that kind of stuff.
Yeah, and the can't like and don't like and want to like, usually that revolves around not being able to get someone on the phone or not being able to get something done on a
Yes.
deadline. And that's the biggest frustration. And
Deadline.
so if you're in alternative assets, hopefully you're in it to get these great returns, right? And
Mhm.
so I'm not going to say ignore the fees, but you want to consider the fees to be secondary to getting the jobs done and getting people on the phone and getting answers to questions and finding out where your stuff is and that sort of thing. I do this math with a lot of clients because here you see the fees. Those of you who have brokerage accounts and you hold mutual funds. Well, a lot of stuff goes on before they publish that net asset value number. And a lot of stuff gets taken out that you don't see. So here for the first time, you're seeing every fee associated with your account. And so I'll add up every little fee that they're paying, and it rarely comes to more than a half or 3/4 of 1% of their account value. And so with full service brokerage firms charging between 1 and 2%, and if you're over here making, 12 or 15 or 20%, or hopefully even more, that should not be a factor. The real key is, are you slowed down? Are you missing out on making money because, it's taking you a month to get a transaction done through your custodian? So
Yeah.
those are the sort of the things you want to balance. Is you want fair fees. You don't want to get um, too many fees, but you want to get stuff done. And I would ask for some clients that they can refer you to, and I'd also ask the sponsor of the investment what has been their experience with various custodians.
Okay. Yeah. I mean, because we deal with that a lot. And that's probably why you
Yeah.
do a lot of your outreach with people like me, fund managers, real estate investors. How describe what that interaction looks like, because you're not allowed to recommend certain investments or even evaluate an investment. You're not an investment advisor. You are a custodian. It's like asking your business banker if they think that this is a good deal that you're asking for a loan for. It's not in their purview. So describe to me exactly what it is that you do for your clients. Like, what does the fee pay for, right? And then your outreach with people like me to make sure that you're able to get new clients, but at the same time you're not able to kind of speak to the quality of the deal they're investing in. So
Yeah,
what do you,
we were.
who do you
Go
do it
ahead.
with?
Go ahead. Yeah, we walk a fine line. I mean, we can't promote or recommend or endorse any specific investment, and we can't make a judgment call. We do get investors say, "Hey, can you look at this and tell me if it's any good or not?" And we just can't do it. So what we do instead is we work with the investment sponsors themselves, and we work closely with the clients. I spend my time divided between working with private equity, private lending, and venture capital companies, helping them tap this pool, and I work on the other side with retail investors who are looking at deals and want to invest in these opportunities. So after 20 years, we just decided we didn't want people wandering around in the, in the maze like Jack Nicholson in The Shining. We wanted them to be able to make this happen quickly, make it a pleasant experience so that they would want to do it more often. So the key is preemption. We've got information that we provide from the outset that answers a lot of questions we know are going to come up. And then by working with them closely, having that initial phone call with them, understanding what they're trying to accomplish for the retail investor and what the investment proposition is from the standpoint of the sponsor, we feel like we've bridged that gap. And it's bridged with phone calls, and it's bridged with conference calls and Zoom and Teams. That's how we get our stuff done.
Yeah. So where would CamaPlan fall in on the spectrum of full service brokerage, concierge, highest fees in the industry versus super bottom of the barrel? You're lucky to get someone on the phone and get your money released on time. Where do you fall in that spectrum?
There's probably about 40 companies in this business, and we all kind of know each other. Yeah, we're all friends, and everybody in this business tries to do a good job. I mean, they really do. Even some that have really poor, reputations for service really try to do a good job. So we're probably right in the middle. We're at 1.1 or 1.2 billion with a B in assets under management. So we're probably smack dab in the middle. But we like to say we're big enough to get anything done, but small enough to answer the phone. And
Okay.
that I think there's a call center application atop of our phone system that the goal is to keep it at 100%. And when we dip, it goes to 99.8 or
Mhm.
99.99 in terms of somebody picking up the phone, talking to you, and getting you to the right person. So we're very keen on that after 20 years.
Okay.
That is the industry's Achilles heel right there.
Yeah, especially if you don't have a checkbook LLC. I've noticed that if you are asking your custodian to approve this investment and to release funds, you're going to have a lot more interaction with the custodian than say I do with my custodian.
Hmm.
We almost never talk, right? We put that money into a very long-term investment, and so it's just going to sit out there for a long time, and then we can kind of figure it out later when that one matures. But I feel like I almost never talk to my custodian. I start to feel like why am I paying them? The annual fee came due. Like that's kind of the way I feel about it. But at the same time, it's like I've noticed when you are doing deals. And you do bump up into your custodian frequently because you're needing to discuss the stuff, get funds released. Funds are coming back, and then you need it released again. Like that customer service starts to really matter. And choosing somebody who fits your style of investing and your speed of investing becomes very, very important.
Absolutely. I'm a customer and a client of this company too, and I do this kind of investing. And
Mhm.
so when I get somebody who's frustrated, can't find things, and then I have to go back to operations and and find out what's going on, I can feel the tension. I can feel the anxiety of the person I'm talking to, and I just want to get rid of that anxiety for them because I know how I feel when I'm trying to get answers on something I'm trying to do.
Yeah. Do you still do any business or operations consult with CamaPlan? Or what's your current role right now?
The current role is kind of ambassadorial, and that I'm reaching out and establishing the way that we will work with private equity, private lending, and venture capital people. And then also, I'm on the RIA circuit, going to the chapter meetings, and I'm sort of preparing that to be handed off. Because I don't do much active consulting anymore where I'm involved in operations. CamaPlan is the last one that I'm going to do. I
Mhm.
still have clients that I provide market analyses for, and I'll continue to do that till I can't, my
Yeah.
my brain can't function. But yeah, that's my role now, and I anticipate once that's built that they're going to say, "All right, get the old man out of here and get some younger blood on this thing."
Yeah, what do you find your best source of new clients to come from? Like, describe what that person looks like. Do you find them at a RIA, or do they find you because they have some sort of venture, like angel investing clubs? Like, where do you feel like 80% of your clients come from?
I think it's always been a case of working with the investment sponsors because they're out there, spreading the word about what they're doing. And again, I might have mentioned earlier that no one gets a self-directed IRA unless they have something to do with it. And so we feel like if we support the investment sponsor community, people like you, that earns us the chance to do business with them at some point when someone raises their hand and say, I don't have a self-directed IRA and I'm looking for a custodian. Maybe, you would offer not necessarily a referral, but one of check with these three companies or something. So that's how we do this. So we find most of our clients through investment sponsors, and then the investment clubs. The RIAs are huge for us. We're the national sponsor at the national level, and then we sponsor a lot of chapters locally, and so that's always been a great resource.
Yeah, two of my business partners are RIA presidents. We have the Utah president and the Rhode Island president, and both of them have been guests on this program before. And so lots and lots and lots of self-directed IRA people coming in. But you mentioned something really important. I'm asking the question about like who is your typical client because I want the listener to be able to hear to them
Sure.
and identify themselves to be like, oh, I should reach out to Joe after this. The time to set up a self-directed IRA. You mentioned two things. One is before you actually go and try to initiate the transaction or before you find the transaction because it does have a little bit of time to get everything transferred
Mhm.
and set up correctly. But it's also you don't want to do it too soon where you have no idea what you're going to invest in and then the money's sitting there
Sure.
not working because it's not in the stock market when it's sitting in your custodial account, not out to work. So, what's the ideal time to get the thing set up? Because you can set it up and not fund it, and then you can fund it when you find something. Or how would that ideal pattern look?
Just get it set up. I mean, we don't charge any maintenance fees for cash, and
Mhm.
so get it open and set up, especially if you're going to do purchases of real estate. The other stuff, you've got more of a time window. If it's a private placement, they're going to say, well, we're closing the private placement on October 30th or 31st. And really, if you're coming in with an extra $50,000 on that deal, they'll give you an extra week. They generally do. So where timing is going to be important to you, you want to get that account open, keep it open. Um, and you might do some private lending out of that if that's what you're comfortable with or you're already there.
Mhm.
As far as the kind of person, we have people that come in, you kind of follow the path that you did, actually. You become an investor, you get the fever and you become involved in real estate, and then you migrate up the food chain, you start raising money. And so the typical person brings something from the outside. We have a lot of accountants. We have a lot of real estate agents. We have a lot of people from construction that did work on fix and flips or did work on multifamily, and they saw the numbers. They know what it's about, and they migrate upstream to get involved with that stuff. But
Yeah.
everyone brings something to the table. We have a lot of people who are headed for retirement or they have been in an industry their whole lives and they've left a string of 401ks behind, and they can take that money and invest in industries that they know really, really well, like
Yeah.
intellectual property, startup ventures. Yeah. So look at your resume, look at what you bring to the table, invest in what you know. That's one of the great things about this is you can invest close to home where you feel comfortable. I mean, I really don't understand Nvidia. I know what
Yeah.
they make. I can't pick up the phone and talk to the president, but I could invest in a local, in a local business somewhere in an industry that I know really, really well and be able to drive down there and have coffee with those people. So,
Yeah.
yeah,
Yeah.
that's
I
the avatar.
I can get you on the phone with the Nvidia CEO if you want. Let me know.
You can? I don't know what I'd ask.
And they used to contract with the company that I used to work for. So that was the first time I ever heard of Nvidia, and I'm kind of kicking myself now that I didn't like invest directly in them because this company they were doing some pretty cool things in the early days of Nvidia. So I'm like, oh man, right? We're all
I
kicking
know,
ourselves.
I know. There'll
We
be
missed out.
another one. I'm old enough to remember when Microsoft went public, so
No, that's true. That's true. I mean, I grew up in Seattle. That was a big deal, right? So
Yeah,
right.
yeah.
lots of interesting opportunities out there if you want to get into public markets. But if you want to get into public markets, you're going to be able to increase your access to those if you do put even a portion of your retirement IRA into a self-directed one. And then just briefly tell us like the different kinds of accounts, because I think people get confused on this one a little bit. I mentioned the traditional and I mentioned the Roth. But another
Mhm.
thing to point out is that all the things that you can invest in that are some sort of investment based account, you can turn into self-directed. I have a self-directed health savings account. We have a
Absolutely.
self-directed what do you call it? I don't have one, but the Coverdell, the education. Like what are
Education savings account. Mhm.
the solo 401k, like all you can have all of these be self-directed. So what kinds
Yeah.
of things would somebody want to be like in a solo 401k versus the just the regular IRA? Like kind of walk us through like the type of person who would choose these different kinds of accounts.
Sure. Sure. We have families who open up IRAs, both Roth and traditional, for the spouses, and then open up Roths for the kids and open up education savings accounts for the kids and health savings accounts for themselves.
Mhm.
And they put as much money as they can into those accounts and they pool that money to go into deals
Okay.
so that even the modest education savings account is getting the same return as the traditional IRAs and the Roth. So there's that aspect of it. So, but they fall into basically two groups. You have the traditional IRA, the simple and SEP IRAs for businesses, the 401k for business, and all of those are incentivized. The government gives you an attaboy or an attagirl for putting money in there, and you get a little deduction. And at the end of the day, when you start taking money out of those accounts, you're going to pay income tax on that. The other side is the Roth, and that includes the Roth, the ESA, education savings accounts, the health savings accounts, and you can even have a Roth 401k.
Yeah.
And those are after tax. Government doesn't give you anything. So, you're going to buy the seed. You're not going to get subsidized seed. You're going to plant the crop. You're going to water it or pray for rain. You're going to deal with blight. You're going to harvest it, take it to market, and then you get to keep it all. The best
Okay.
example of somebody who did that was Peter Thiel put his PayPal shares in his Roth. He's got like $1 billion in his Roth. It's never going to be taxed. You never have to take it out. You can pass it along to your kids. You can empty it out the day you turn 59 and a half and go buy an island or a spaceship. No one's going to care. So that's the two sides of it right there. As far as the business accounts, if you have a small business, even if it's a side gig, it's a matter of filling out a couple forms to get a solo K or a simple or a SEP in place and start socking away more money. They all have higher contribution limits. I think the 401ks this year is 72 if you're under 50, I think. And I just made a note here. There's even a age 60 to 63 catch up, which allows you to throw even more money. So someone in that age bracket could put away $83,000 in earned income into a 401k. And immediately that's in a self-directed account. You can do with it what you please. And it's
Yeah.
sheltered. If it's in a 401k regular one, it's sheltered. Again, the taxes are deferred. So you're allowed to accumulate wealth without interference until you reach 59 and a half. And you don't have to take it out there. They will start making you take it out at 73. But
Let
yeah.
me ask you a quick question about that because my husband and I retired early before just before we turned 50. And so I feel like we have like these 10 dead years between, he was 48 and then we can start pulling at 59 and a half. So we have these 10 dead years where we're living out of our cash accounts because we can't touch our retirement yet. But after we get to that 59 and a half, the magic number, 60 years old, should we still be contributing to these accounts because we want them to grow tax free? Because the tax free growth in these Roths, if you can put in a little bit, the contributions are pretty low. But if you can put something in that's going to grow rapidly, like the Peter Thiel example, would you continue to do that after you turn 60, or at a certain point you're just like, we're not going to contribute anything else?
Absolutely. If you have something to do with, it's an opportunity cost question is what else are you going to do with the money? In the Secures Act in 22, they they got rid of the rule that you couldn't contribute to your IRAs after a certain age. You can actually be taking money, being forced to take money out of your traditional and being
Mhm.
allowed to put money back into it as long as you have earned income. Go figure, right?
Yeah.
Um, and so yeah, as long as you've got something good to do with it and you can get a return, put that money to work and get a return, I would do it. Yeah, you know.
Yeah, the earned income though, that's the important part because even though we're retired, we're like too young to retire. Like mentally, we're too young to retire, and so we still find things to do and keep us busy, and contribute in meaningful ways. And so that earned income is an important factor of that. If you're
It
retired,
is.
then that's a different set of rules.
That goes away. Yeah, yeah. And it's the same thing like you get Roths for your kids and you want to give them earned income. The
Mhm.
classic example is the baby pictures on the real estate brochure. Yeah, everybody's heard of that, but you put them to work and they get earned, have to have earned income to put in there. And that's the case even if you're like formally retired from a job at 65, that then you can't contribute because it's not earned income. If you go
Exactly.
down and become a Walmart greeter, I guess you can put that in there. But yeah,
Yeah. Little bits of things, but
little bits of
stuff in
things.
there with high growth stuff now, right? So that you can pull it out tax free later on. Like that is the beauty of the Roth. Buy some cheap investment for your whatever your I don't know what it is right now, $7,000 a year or something like that.
It's 8,000 this year, and I
Okay.
think there's a $1,100 catch up.
Okay, and a catch up. Yeah, that's kind of what we do with our HSA. We'll pay cash for our medical expenses, and then we save all those receipts, and then later on we can go pull that out of our HSA years down the road. While that
Hmm.
HSA actually has the best tax structure of any of them, as long as we let that leave that in there and let that grow. And so that's kind of an important aspect of just little tips and tricks on how to manage leaving that money in there as long as you possibly can, and then when you pull it out, for how much, and all that. So you guys can walk everybody through all of the regulations of that and help people pick out
Absolutely.
something that's like a really good fit for them. I think sometimes they'll hear things on podcasts or whatever, listeners, and will be like, oh, I should set this up or I should set that up, and then they find out it's really not like the best fit for them. But just knowing these things exist and knowing what questions to ask, and then you can suggest those things, are super helpful. So I appreciate you coming on and sharing the process of how to open up the account, how to fund the account, and then how to use the account, and then how to optimize the account, making sure you have the right types, your money's coming in and out at good times. And again, you can't give too much advice on that from a certified financial planning standpoint, but you can tell people what's available, and then they can go back to
Sure.
their other professionals to decide what's going to be the best fit. So, how do people get a hold of you? I think I asked you the sneaky question, who's the best one? So the person who knows who should get a hold of you afterwards. But I'm going to put some stuff up on the screen, and you just kind of describe for those who are not watching on YouTube how they can get a hold of you.
Yeah, this is you go to there's a lot of resources at CamaPlan.com. We do webinars every week, so you get a look at different types of investments and how to do them. Then the phone number, that's the best place to reach me or Courtney or Matt, 215-283-2868. The website is CamaPlan.com, CamaPlan. And to get a hold of any of us, send to engage as engagement, engage at camaplan.com. And we love talking about this stuff. So when you call in, don't feel like you're going to be pressured to sign this or do that or, open an account. That isn't, they answer the phone, they're not going to start opening your account. You have questions, you need to get comfortable with this, and we're happy to help you get there.
Yeah, definitely. Thank you so much for sharing. If you want to get a hold of me, investwithemma.com, super easy, just send you straight to my calendar page. If you want to connect with me on anything, especially real estate related, that's kind of my silo, but we have a lot of different guests on the show. If you have any questions that I can't answer, I can direct you to the person that you can, which is, I get the whole point of listening to a podcast is actually being able to get in touch with the hosts and the guests afterwards to talk about their specialty. And it's free calls. So like you put enough of those together, it starts to look like something. And then you become a more educated consumer when it comes time to hire your professionals. So please reach out to us. We are happy to share and help you invest better, because I feel like the better investor you become, most of the people that invest with us, once they reach a certain level of wealth, start giving it away, or they'll go start a passion business that really thinking about like, how can I make a difference in the world and really contribute to my community. And I love watching that happen. I love empowering people to be forces of good in their communities. And that's one of the big thing that drives me to do this type of educational content, is just to turn us all into little armies of philanthropists and really band together to make the world a better place. So I appreciate you listening. I appreciate being here to give you the tools. And thank you so much, Joe, for coming on and sharing.
Thank you, Emma. Take care.
All right. We'll see you next week when we're back with another passive income adventure.